The 60-minute chart that we look at every week is a chart that shows, basically the trend of the market and what the news was. The last 2 weeks, there's been almost the identical thing. Any little dip has brought more rally, and we've continued to see a mild upward trend as we look at this chart. Here is our 60-minute chart of the S&P 500, and you can see as we look at these 5 days in here, the gray area is the overnight trading, the white area is the trading during the normal trading hours during the day. And you can see we've had this, modest uptrend. We had the exact same thing that we showed you last week. Monday, strong world markets lifted futures, and you can see there was some buying overnight, but then selling came in on Monday as the market tried to correct. No real news at that time. Here, tech stocks started to get sold, but they started to get bought on Friday. So this rotation, you just have to, it's a kind of a guessing game as to which ones are going to going up and down on a daily basis. So the market sold off, but you could see by midday it made its low and then came back. On overnight here on Wednesday, the Nikkei made a 26-year high, and the Japanese yen is starting to look better to us. And that little rally brought some selling during the day, but then the market rallied because it seems to always want to rally into the FOMC minutes, and you could see that it did that. And the FOMC was just completely split on inflation. They were not very sure about a December rate hike. They were iffy on that, though they were leaning in that direction. So that bearishness, or kind of a reversal from what we're hearing is a little more hawkishness, helped the market move up. So that dovish feeling carried into Friday after the opening. You see it kind of slipped back overnight, but then the dovish Fed then started to bring a lift in the market again. Bitcoin on Thursday over 5,300. Bitcoin on Friday 5,800. And man, that is starting to bring some buyers in the gold markets. They are definitely related in my mind. And that's really what's going on here as far as the precious metals. There is some kind of a move into safety, and with bonds moving up 1 full point here on Friday, that is definitely, you got to make you wonder, who's moving into some positions of safety in advance of what could be a coming market correction. Friday, you see just this choppy movement going on right here, and a little bit as we move into the final hour of selling coming in. We'll wait and see if that is meaningful, but the S&Ps have been up to the upside all day long. Now only up about 3.5 points at this time, but the Nasdaq's up about 23, so the market's still higher, as you could see, and this moderate upward churning uptrend is continuing in the market. So for the stock market this week, it hasn't been all that big of a gain. As a matter of fact, most of the major indexes are just up a small fraction here, and the Russell is actually on the downside by about 0.5 percentage point. So tiny little gains for the stock market during the week in this modest upward churn. The range in the E-minis, including some tails of selling in there, so that rebounded and some buying spurts that fell off, was a total of about 15 points, maybe 16. That is an incredibly small range for a week's period. And that is what happens when essentially buyers meet sellers and markets start to churn, is that you start to get a narrowing. And at some point, that narrowing brings a widening, and it's yet to be seen what direction that will be in. Of course, in my opinion, that direction should be to the downside. I'm going to show you more of that as we look at the short-term view coming up pretty soon. You've seen the video that we bring here every single week. We put a ton of work into it, a ton of information, and what we want to do is me trading for 43 years, man, have I ever learned a ton about the markets. And what we want to do is we want to bring to you an opportunity to see all of the videos and everything that we teach and what I've learned in all of these 43 years. So I want to tell you about our video library and what's in there, and give you an opportunity essentially to binge watch what we produce for a whole month for just a ridiculous special offering price. So these are the videos that we produce every single week. We have 8 video categories in our library. That is our level 2 membership. Over 250 videos in there. We do 4 new videos every single week. And we kind of mix them up, though. We do Future Speak every single Wednesday, and you can see Future Speak if you become a member. We do cycle analysis on 24 different futures contracts. We also do tools for techs. That's where I discuss many different charting tools and studies. A couple of recent ones I did was trading 4 different types of gaps, and one on scalping, on changing the mindset, and that's really an important video for short-term traders. Trader psychology, this is one where I discuss the personal issues that really may be bringing you challenges, getting in your way of profitability. One that I recently did was dealing with the urge to quit trading. Man, that is appropriate based on what I've talked about today. Stock sectors videos and IRA-MO. IRA-MO recently did one on long-term holdings. Should I stay or should I go? And stock sectors do these usually one a week. And a week ago, I did 9 stocks set to rise in a rotation. That included steel stocks, which you see soaring today. And I did this week 29 high-risk stocks for the fourth quarter, and some of those were in the healthcare stocks, which you see coming apart today. So really a great list. You should really become a member if you want to see those videos. Big picture analysis, I recently did one on the U.S. bond market, which is really close to the analysis, to the things that we're seeing going on right now. Style, strategy, and plan. Last one I did was on trade ownership. In other words, making a trade your own, no matter what I say, no matter what anybody else says, the importance of being responsible for your own trades. And of course, Market Week, in which we look at what happened in the last week, and I give my short-term view for the coming week. So that is our list of videos in there. You can watch all those. You can binge watch them for the next month. The special that we're offering is $16.50. All you have to do is write me an email, slim@askslim.com. Tell me you want to become a level 2 member for that price, $16.50. After before the first month is over, you can just cancel it. You don't have to stay on anymore if you want, or if you like it, you'll just stay on and it'll renew at the $33 a month regular price. So it's worth it just to binge watch this. You're going to learn so much from what I've learned about the markets and trading in the last 43 years. I just don't know where there would be better assortment of information. And I do a lot of teaching around my cycle analysis that you see. So if you're interested in that, that will be very valuable to you also. So that is our special for the week. Write me, slim@askslim.com. So for the stock market, we said in the last week that we thought that there would be a minor dip early in the week, which we thought could get down to 25.28. It got nowhere near there, and the dip barely lasted a day. And then we thought it would rally again, and that basically it would be a rally week, minor dip and then go up. That was pretty much the pattern that we got, but the amount of the dip is not anywhere near as far down as we thought it would go, so we don't really get full credit for that. Though we did think that the pattern for the week would basically be a dip and then back up, And that's basically what we got. You can check last week and you can see that that's basically what we said. Here we are still hovering around this fib extension. So you can see in here these patterns, and the alignments are starting to get clearer. What we believe is that in the next week there's going to be a decline early in the week. We could see Monday, Tuesday, potentially into Wednesday, a drop in here. That would be the same length of cycle that these last two were right in here. And this half cycle right in here would bottom at the same time. That's this one right in here. That says that you're likely to get a dip in the market, and we're going to call for a drop to that 23% right there at about 25.42. If selling got more aggressive, it could get down to this 25.30 area right there, but we kind of doubt that it's going to do that. And then we think that there's another rally. Now, you'll note that we've begun to put in a downward trend in here. We think that this cycle in here is the one that's going to bring failure, but that's a little bit too far out there for a short-term view. Basically, for this week, we're looking for drop and then rebound in there. We've got pretty much the same pattern when we look here in the NASDAQ, where it sets up for drop and then rebound, maybe 2-3 days on the downside. Target in here would be around 60.38. Craziness would be down to 6,000 area, but we don't think so. So more like that, because you see the slim ribbon coming up, and it's certainly been giving support. Down early in the week, maybe touch those highest support areas and then move back up. Now you can see in here that you have a strange situation where the market is basically trading to the upside. The momentum is strong to the upside, and the internals got oversold. So that doesn't leave much room for much decline when you see that. That says to you that, well, the market's likely to have just this minor quick dip and then move back up to the upside. S&P 500, SPX, it's got the same thing. Could you imagine that it should be showing an oversold reading right now? That says that if you get a dip, it's going to be quick, and that it's likely to rebound again. And then maybe we're a day away from the dip, because this is a situation that is pretty rare, where you're trading at the high and you're showing a little bit oversold. Man, that is a crazy situation, and says the internals of the market are supportive to getting only a brief decline and then moving up again. When you look at overall the intraday, now these are intraday momentum, you can see that, well, clearly the Russell has floundered. As the Russell has gone to neutral and has been neutral this whole last week, while clearly these have been still very strong and never giving any sign of any selling. So, I talked about the importance of being long at the top, of believing the momentum, of not being on the wrong side of it, so that when the market really turns, you've got the energy to be on the right side of the market. And in this case, very clear when you look at that. Other than the Russell, the other major indexes are still very strong. So that is a look at the stock market for the short-term view. We'll look for a little blip to the downside and then up. Now, I want you to see this date right over here. This is October 24th, 25th, right there. I'm saying a dip down, and I'm saying a rally after that into October 24th or 25th. What am I suspicious of? Why do I get that? Well, I want to take a look at the VIX right in here. The VIX, which is following these patterns now spot on, you can see has a low due right around the October 25th. You see I have this marked off as the next period of stock market weakness. That coincides with that October 25th being a time when implied volatilities are likely to spike. That means that what we see is that this continues to erode down or move sideways or lower until that date, and that is supportive to what I just said about the stock market, that it's likely to get a brief dip to the downside and then another move up to the upside into that date of October 24th or 25th. That's the one we're going to keep our eyes on. That's the one where we think that there's a potential for an important trading top, something that we haven't seen in, I can't even remember. Can you? I hope you enjoyed that video. Be sure to subscribe to our YouTube channel And also go to AskSlim.com and become a Level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them. I've been crazy.